Hey, good morning. I just want to say that tomorrow's Saturday. I will do my usual weekly webinar video. So if you want to make sure you catch that, if you're not already subscribed, please do subscribe and please do like today's video. And I'd be very grateful if you could share it. So yeah, make sure you join me tomorrow. The video will be released in the morning. For today, we do have the non-farm payroll number, and the consensus is that 268,000 jobs were created in the US over the last month. So how could that affect the markets today? Well, stock markets have finally started to climb. I was really looking for this move at the beginning of last week. I did call a low in the stock markets, and I did think they would start to climb. But as you can see in the NASDAQ, it's been a slow climb. So today is quite important. We need to try and get the NASDAQ over this line, over the red line, and then beat the previous high, which is up at 12,225. How are we going to do that? Well, I think we actually need a weak jobs number. I think we actually need a number weaker than 268,000 to help the stock markets go higher. Sounds odd. You know, you would think that creating more jobs would be good for the economy, and of course it is. But the focus now, as everybody knows, is on inflation more than the strength of the economy. And I think if we get a weak number, it will calm things down. It'll make people worry less about a big move in interest rates from the Federal Reserve, and therefore fears over a recession could subside a little bit. That's my thought. If we get a strong jobs number, it could fan the flames of inflation, worries over higher interest rate rises or coming sooner rather than later, which could push the economy into recession. That's my take on it, we see. So I think personally, if I want to see the stock markets continue higher, as I think they will, a weaker jobs number would help that. The US dollar has been in a very, very strong uptrend. It's been pushing higher. We've actually broken some quite important resistance levels. If you've been following me recently, you'll know all about that. So I'm not going to run through that again. It did trigger a move lower in the euro US dollar, and this was our sell signal for the week. And if you reversed out of a long into a short position there, that really did work extremely well. This was the crucial point down here. And once we broke that, we triggered our sell signal. For me, the sell signal was a break below 103.25, and we have dropped another 200 pips. So that was a really great trade, reversing into a short position and capturing that move. Same thing happened for the euro versus the CAD. That was even nicer actually, because we broke lower, but then bounced back to the 133.90 area to put on a little short position, and that worked beautifully. Dollar CAD has worked really well this week. That gave us 100 pips, selling up at 130.60, 130.80. That 1 year trend line, that was a nice obvious trade. So the Forex markets have really been good to us. Even some yen pairs doing quite well for us this week. Hundreds of pips just on the Forex trades. Yeah, yen pairs also did really well. We had that big support down at 135.00, 134.80, and we had a low for the week there, didn't we? I think 134.93, 94. Not a huge bounce back, but enough to make some profit. So again, yen, all the technicals are just working really nicely now. And I must admit, I struggled last week. I'm not good in sideways markets when we're going up for a day or two, down for a day or two. So these kind of conditions now this week are working really nicely as we jumped onto some breakout trades. What else was it? Gold, that was a beauty. Gold, we were shorting up at 18.11, 18.15. And it's plunged. I've been talking about gold going down for quite a long time. Finally, the move came. We had to wait a long time. You never know when it's going to happen, and it just bolt out of the blue this week. Gold decided to collapse. Okay, great. So we're getting what we expected. Silver also significantly lower. If you manage to jump on short positions there, that looks good. Now, I think these trends can continue. Obviously, with the non-farm payroll number out, that could change everything. But the dollar is in a very strong bull trend, and it has broken important resistance levels. Gold is in a bear trend. Look at that. You know, we've been in a bear trend ever since that double top. And I've been warning about this double top triggering a move to the downside for a very long time. Finally, we're getting there. Can you just about see that double top there? You know, so this is all playing out as it should be, and I don't see any reason for these trends to reverse. I don't see any reason why gold should have should turn around and establish a bull trend going forward. I don't see why the stock markets. Actually, I do think the stock markets can recover, so that's counter trend for this year. But of course, they are in a longer term bull trend, and I just see what's happened this year as a correction. So the longer term bull trend for stock markets can continue. The longer term bull trend for the dollar, which has been going up since 2008, I think that can continue. The short-term downtrend for gold can continue. What else do I need to talk about? Japanese yen does look like it's probably turned. It's trading more sideways. Really, it's consolidating, and we have to try and figure out whether, well, the dollar yen could be forming a head and shoulders pattern on the short-term charts, but we'd need a break below 134.80. So, but of course, we should get some guidance from the non-farm payroll today, and then we'll figure out if that support level holds, or if we get a weekly close below 134.80 in the dollar yen, that would be a sell signal for next week. Okay. Join me tomorrow for the webinar, and we will run through what happens today in the non-farm payroll number and see how that sets us up for next week, and see if these longer term trades that I've talked about today will continue.